Well, good evening, everyone. Hope everyone is doing fantastic. It is Tuesday evening, which means it's another live. I think this is like the third or the fourth one in a row. I know everyone's not going to know what to do with all of this time of awesomeness together, but I want to welcome everyone in as always. As you're coming in tonight, do me a favor, go into the comments. Tell me, hey, tell me where you're watching from tonight. We always like to have audience participation. I am super excited about tonight's show. I'm super excited for the guest. Finally, it's only taken, I think, like a year and a half, maybe 16, 18 months to get her to come back on. I thought I scared her away last time she was part of it. But we have tonight a special guest. Let me bring her in here so y'all can say hello. There she is.
Hey,
hello,
guys.
Erica. Let's go to this view. There, that's even better so you can see a little more of us.
Perfect.
Welcome in tonight.
Thank you for having me. It's crazy to think 18 months. Lord.
Well, we've been a little busy doing real estate around here.
I was going to say, it goes to show the market is heating back up, right?
Yeah, it's been a little crazy lately.
Yeah.
But first off, how's life? How are things going these days?
They're great. School has just started. I have two teenagers. One is in 8th grade and the other just started high school. So, it's exciting. Mom is very nervous, but so far so good.
Yes, we now have one that is a junior over at AAST, and then one in middle school in 8th grade and one in 5th grade. So they're very excited for next year to be able to all go to church together on Sunday nights for youth ministry, and all three of them will be there.
That's incredible.
Yeah, it's going to be good. But yes, school has started here in South Carolina. For those of you watching from the Northeast, you may not have started school yet. I remember growing up in PA, we never went to school till after Labor Day. But down here, we started a little bit earlier. But welcome in, Erica. We're going to have some fun tonight. We're going to talk about one of your favorite things in the world, interest rates and programs and all the fun that goes around it. Because I've had a lot of people over the last few weeks that have jumped in. Hey, what's going on with interest rates? What's going on with interest rates? And I've told them all, I promise I'm getting Erica on. We're going to get together. We're going to do this. We're going to do it. And so finally, we've made it happen. So I'm excited for it. So before we get into it all, though, let's just go over here and check out the comments, see what's going on. So first we have John coming in saying New Jersey. Welcome in, John. We're doing great here at the beach. It was hot here today.
It was very hot. We've had last week, I feel like it was good, good weather, getting a tiny taste of fall. When I say tiny taste, in the 90s, not 100.
Keep the pumpkin spice away, please.
Yeah.
Please, for a little bit farther. Then we also have Dora, who's in from California. She says, hi, Jeremy. Hello, Dora. Welcome in. As you guys are joining into the show tonight, like I said, if you have questions about anything related to real estate, between the two of us, we should be able to answer it, number one. If you want to know recommendations for good food spots, we can answer that. I have the fashionista with us tonight, otherwise known as the stylish lender.
Yes.
So if you want to know about fashion stuff, I'll have you answer those questions. I will stay far away from them. I did, though. Am I looking good in my red, white, and blue tonight? Is it?
You are. Yes.
Okay.
I think that's very fashion forward.
Yes.
Big approval. Yes.
Good. So, awesome. Oh, here we go. We got Linda coming in. We made it to Myrtle Beach. Awesome. Yes, Linda
Nice.
and her husband they're in the process of buying a new home with D.R. Horton in
Mhm.
Waterbridge, and
Oh,
they just drove for the last 5 days across the country from California.
wow.
Yeah,
That's a big move.
it definitely is. So, anyway, before we get into the topic tonight, Erica,
Mhm.
I thought it'd be kind of fun to show some of the stuff that I've seen recently. I see all of these news articles and things that pop up, and well, this was one that popped up recently from CNET saying mortgage rates predictions for the week of August 26th to September 1st.
Let's hear it.
Mortgage rates have moved lower in recent weeks, but home buyers are still waiting for an affordable market. And
Mhm.
as you go on reading it, it talks about it, saying that earlier in August, the average rate for 30-year fixed mortgage fell from around 7% to 6.5% in less than a week, to
Yep.
the lowest level in over a year.
Mhm.
The dust settled from the brief plunge in the stock market, mortgage rates have remained relatively flat. The economy has slowed enough for the Federal Reserve to cut interest rates at its September meeting. So it's saying what I'm getting from this is they're saying mortgage rates are going to see more cuts coming soon. It says today's average rate for the 30-year fix is 6.51% according to data from Bankrate,
Yep.
and that it goes on to say that if inflation and labor data continue to point to a weakening economy, we could see average mortgage rates near 6% by the end of the year. It also goes on down here to say, and then they put it in purple. Most economists say the Fed will cut federal funds rate by 0.25 at its September 17th, 18th meeting, so the target range of 5% to 5.25. The
Mhm.
central bank is also facing pressure from some market watchers and investors to make deep reduction in September and possibly a second cut later this year. Can you explain to everyone what the heck that means?
Yeah, it is a lot that goes into it. I mean, really the best way to track interest rates, if you will, is really as simple as looking at the economy and most importantly the unemployment rate. If the unemployment rate is trending downward, then we're going to see a downward decrease in interest rates. So look, number one thing is look at the unemployment rate.
Okay, so the
Mhm.
unemployment rate's something to pay attention to.
Yeah.
One of the other things, I kind of chuckle at it, but in the article they go on to say, "Will mortgage rates ever be 3% again?"
Honestly, I hope not, because I mean, think about the economy when interest rates were at 3%. We were highly unstable, and you can, say firsthand, gosh, when we were in the 3% range, you're going to try to make an offer on a home. On average, how many bids were there?
Yeah,
I
it
mean,
was crazy on
15,
some of them.
15. Yes.
I remember one condo that I had 13 offers on it.
Yeah.
I had to put it in a spreadsheet to show to my seller because we were trying to keep track of it all. And I was like, as soon as I
Mhm.
started writing down one of the offers, the next one came in. I was like, you know what? I'm just opening up a spreadsheet for this thing.
Right.
And it's literally what we had to do.
So it's like you can't have your cake and eat it too, right? So
Right.
interest rates are very, very low. The economy's not doing well, and you're buying at a higher purchase price than you are today. We're seeing some stability. It's slowly getting there, but
Yeah.
if we're in the 5-6% range, overall, that's traditionally very, very low. We've just gotten spoiled for the past couple of years.
For sure.
Mhm.
And one of the things that I have shared with my audience for a while,
Mhm.
is that there has become over the last 18 months, because it's about 18 to 20 months ago where we saw the rates just start doing this and
Yeah.
going up almost vertically, right? And they
Mhm.
went from that 3% to 8% in a matter of no time.
Yep.
And people, when that took place, everybody went, "Er, put the brakes
Mhm.
on. We're not buying. We're not going to do anything right now. We're going
Mhm.
to hold out." And so one of the things I've been sharing with the audience lately is there is this massively huge demographic of people that have been waiting for the
Mhm.
last 18 months to 2 years
Oh,
to
yeah.
buy a home, just waiting to see when a rate's going to come down. And
Mhm.
now that they've started to come, and what I predicted earlier this year was that as we get closer to the fall and we
Mhm.
have this wonderful election take place, both sides of the political side, whichever one you're on, it doesn't matter, but both sides are going to do whatever it takes to get those rates down to make them look better and boost the economy. And then
Sure.
they can go, look what we did, and sit back and just smile
Mhm.
at everybody for it.
Yeah,
So, with that, that's great, but there's the whole other side to it.
there is.
That when this takes place and rates go down, what's going to happen to prices? Prices are going to go nuts again.
Mhm.
Inventory is going to go crazy. What have you seen, being on the lending side of it, what have
Mhm.
you seen over the last month or two in the lending industry?
It's really night and day different. I mean, this is the busiest I've been the past couple weeks, and definitely over a year and a half. People that have been on the sideline are back in the market, for sure. And I'm seeing a lot of investors as well because I think they know it's like, okay, now's my chance to purchase at a lower price before they start going up. And then they can make, more return on their money as far as the rental income goes. So, there's lots of opportunity, but especially for these first time buyers, do not wait because as the interest rates go down, the prices are going to go up. There's going to be those multiple offers, and it just does not put you in a good strategic spot. So, first time buyers, definitely, I recommend to look at all options.
Yeah, the big thing, and that's what I've kind of said for months now, is
Hmm.
that as the market heats back up, which it's going to do, it's not going to go crazy like we saw 21, 22. We're not
Sure.
going to see that, I think, ever again in our lifetime.
Hmm.
And honestly, I don't know that I would want to,
Yeah.
because we just worked ourselves ragged trying to take
Hmm.
care of everything, keep with the rat race. Um, but as the rates go down, more buyers start coming,
Hmm.
competition's going to go up exponentially. So
Right.
somebody who's been kind of waiting, honestly, I would start seriously investigating and talking and thinking about it right now. I'd be
Hmm.
reaching out, getting that pre-approval, getting all my ducks in a row so that when the home hits the market that fits my needs, you can jump on it right away.
Right.
If you're someone who has to sell a house in order to purchase here, I would be having conversations now with the agent in New Jersey or in New
Hmm.
York or Arizona or wherever you're coming from so that they can start preparing your home, getting it ready for market, getting it on the market, getting it under contract so that when things hit here that you want, you can move on it quickly. Because I feel that as we go over the next 2, 3 months, competition is about to get crazy again.
Yeah.
And when that happens, unfortunately for you as a buyer, it takes a lot of your buying power away. And especially if you are someone, um, you know, that is needing to do a loan,
Hmm.
you're going to be sometimes at a disadvantage over someone with cash. But I know, Erica, one of the things that you all offer is the ability to get a full pre approval ahead of time so
Yeah.
that you can make your offer feel and look as strong as someone with cash, right?
We do, yes. That's one of the great benefits of working with us. We can send you through underwriting so you have a solid pre approval, meaning everything that you can do, that you can control, it lets the seller know, yes, I've done it. I've done all my homework. There's no red flags. The only thing or the only contingencies will be an appraisal and title work done from the attorney's office. And this
Yeah.
also helps to expedite things. If you're making an offer and that seller needs to move quickly, well, guess what? Since you've done all that work up front, we can do that. We can close in 2 to 3 weeks or as quickly as we can get that title work back in.
Yeah. And so if you're in that situation, be prepared and have as much ammunition as possible. As I say, the
Mhm.
way I kind of put it is load your gun with as many bullets as you can so that you have everything fully locked and loaded when making that offer so that you
Mhm.
can compete. Because unfortunately, at the end of the day, and Erica, you'll agree, even as someone who does loans all day long, if
Mhm.
there's two competing offers and one of them's cash and one of them's not, or one
Sure.
of them has contingencies and the other doesn't, you're unfortunately going to lose out most of the time.
Right.
You know,
Yeah.
so
Be
anyway,
proactive and, working with a great agent such as yourself. You're
yeah.
going to go the extra mile to make sure, that that offer is as strong as possible. And I'm happy to call the listing agent, to give my 2 cents and to let them know that they've done their due diligence.
Yep. Now, Erica, let me ask you this statement and tell me
Mhm.
if you agree with this. I believe that the magic number is anything that starts with a 5. That when we see that number start with a 5, we're
Mhm.
going to see business go crazy again and the market go nuts. That when rates go down under 6, even if
Yes.
it's 5.99, it's going to
Mhm.
start to make it go nuts. And the reason that I say that is that if you look at all of your big name builders,
Mhm.
when all of the stuff with interest rates went crazy, they still continued to stay extremely busy. Why? They have super deep pockets. They own the mortgage company and they were buying down those rates to
Mhm.
5.99%.
Yep.
And when somebody came into their office and they said, "Hey, we have two houses. One of them you can get at the regular rate, which is 7.5, or this one
Mhm.
over here that's, 5.99, they're going to move on the 5.99.
Yep.
I had a client who they ended up buying a new property in Waterbridge,
Mhm.
and they were looking at two loans. One or two houses with one was on their builder program, one wasn't. The
Mhm.
difference was $340 difference
Right.
in monthly payment. And so
Mhm.
I basically said, "Do you want to spend an extra $140,000 to have the woods instead of getting the home on the pond, which is what your wife likes anyway?"
Yeah.
And well, guess what? They're living on the pond. But
Yeah.
what are your thoughts?
Absolutely.
Would you say that under 5 is the magic number, or where do you think rates really need to get to make
Mhm.
things just go berserko again?
Well, I mean, it's already happening. Um, just even not just with purchases. I've had a ton of clients. They're doing cash out refinances or looking into a second mortgage, just trying to be proactive because a lot of people with this inflation, they've gotten into debt. They're trying to get rid of that debt by utilizing the equity in their home so that they can be prepared in the next couple of years if they want to sell their current home and purchase again. They've got that equity ready and now they have their credit ready. But as far as purchases and interest rates coming down, guys, that's just buying power. Interest rates, I'll give you a prime example. Just a little bit ago, they were 7.5%. Now they're 6.5%. If you're looking at a $300,000 mortgage, that's a $200 savings per month, similar to what Jeremy was talking about. And that's $35,000 more in buying power. So you can afford 35,000 more than you could before. Or if you don't want to spend that, again, you've got $200 in your pocket. So any rate reduction by all means is going to help and inspire people to get back, into looking at homes. And if we go from 6.5, down into the fives, again, more buying power and more people that you're going to have to compete with when it comes to offers and those
Okay,
prices.
you just dropped a knowledge bomb there that I want you to go back
Sorry,
and say that again.
I got too excited.
So if rates were 7.5 and went to 6.5,
Hmm.
say that all again.
Yep. So 1% lower in interest rates, and this is based on a $300,000 mortgage. That saves you $200 a month alone from the rates dropping 1%. It also helps you afford more. It helps your buying power. So, it's about $35,000 difference. If you're a first time home buyer and, it's hard right now, prices keep on going up. This could literally help somebody that couldn't qualify just a couple months ago qualify now, because again, they've got 35 more $1,000, in purchasing power.
Wow. Yeah.
Mm-hmm.
There we go. Rates dropping 1% from 7.5 to 6% saves you 200 a month and raises buying power around 35,000.
Yeah.
That's all right. We're done for the night. We can go home.
Mic drop. No, just
Yeah.
kidding.
Wow, that's powerful. Now,
Mm-hmm.
one of the other things too, and for those watching, I see there's a bunch. We got about 20 people or so on right now.
Mm-hmm.
If you guys have questions tonight about mortgages, about rates, about financing, loans, any of that kind of stuff, real
Yeah.
estate, whatever it is, we're wide open. We're not afraid to take on any question on here. We will answer any and all of them. So if you have them, type them in the chat. And while you're doing that, one of the things, Erica, I wanted to talk about with you is I also know that here in South Carolina, and I just found this real quick when doing a little research today, we have homeowner assistance programs, right?
We
I I
do.
know that some of them have a timeline that they have to be used by a certain amount,
Mm-hmm.
but these were a few that I found just doing a quick search on HUD about the different things. But talk a little bit about some of the programs that you guys offer to help people with first-time home buyers
Absolutely.
and not just a first time, but anybody buying a home.
Yeah. There are so many products out there now for first time home buyers, and they could be geared towards first time home buyers, but you don't have to be one. For instance, you still qualify for a first time home buyer product if you have not owned a home in 3 years. That's it, 3 years.
Okay.
Um, and then there's also lots of products with 3% down, but more importantly, with 100% financing. As Jeremy, as you mentioned, there's lots from the state. There's lots of county products, and those will run out, but it's great to hop on them while they're available. Guild has a specific program that we offer where um, we give a 3% grant or down payment assistance that you do not have to pay back. So we give you 3% towards, your home purchase, and those are very flexible. It's a great opportunity to purchase. FHA also has down payment assistance. There's several programs that really they're just looking at the particular area to see if you qualify. USDA, all of Conway qualifies for 100% financing. There are income limitations, but they're quite flexible. And then there's also a new product out there. It's very similar to USDA. It's, again, very specific to that particular neighborhood. And I have a map. I can type in the address to see if it would work for that program. But it is a full percent lower than all the other loan options. So whether you're a first-time home buyer, you might still make a lot of money. Again, it's all dependent upon the address and the area. So a ton to choose from. It's best just to get a loan consultation. Let me do the research and the digging, and we can see what will be the best match for you.
Yeah, and I know that some people want to know at times, hey, would that house go in? There is, if you just do a USDA eligibility, you can find this and
Mm-hmm.
you can type in to the system any address and it will tell you. I can tell you from my experience of just knowing the area that it's basically going to be stuff out in Conway that
Mm-hmm.
qualifies for it. Stuff towards the beach, Carolina Forest, North Myrtle, that area is not going to qualify into those programs. Now, Erica, I don't know if it's still available, but I remember talking a few months back with you. Is the Heroes program still around, or is that one ended?
That ended, but it comes up every single year, and it's called the Palmetto Heroes Program, and it's for all of our heroes. I mean, teachers, anybody in law enforcement, there's anybody that works at the hospital. It doesn't matter your title, policemen, that sort of thing. It's again, it's you get a down payment assistance that is forgivable. You do not pay it back, and it's a discounted rate as well. Normally, it comes out in the spring and it ends in about 3 months. It's pretty quick, but again, a great option.
Yeah, I remember you and I talking about it in the springtime this year.
Mhm.
You're like, "Who do you know that fits in this program?" I'm like, "I don't know anybody right now. I wish I did because I wish I could qualify for it. I would have figured out a way to go buy a house with it because it
I
was,
know.
I think it was like
Mhm.
5.75 interest rate or something even. It was crazy."
It is. It's very discounted. So, if you are renting right now and your lease runs up in the spring, call us. We'll get you ready when that time comes.
Yeah. And now the other thing, Erica, talking about just different programs, I know
Mhm.
one as well that a lot of my people watching do, but
Mhm.
you can do VA loans as well, correct?
We do, yes, and it's obviously it's wonderful to be able to support our veterans, and a big thank you for all you do. But we do not charge any sort of closing cost on a VA program. We service those, meaning that I will always be your point of contact. It's not going to be sold time after time, and you don't even know who you're writing your loan payment to. Um, and you don't have to stick on an 800 number for 45 minutes if something happens. So it's great. Yeah, it's very, very flexible program. Again, the pricing is great on it, and you do not have to pay closing cost.
Yeah, and I can vouch as someone who has loans with Erica right
Mhm.
now that when there is an issue, it
Yeah.
is so nice to be able to just call her or call
Mhm.
the office and talk to Yvonne or talk to Mike and
Yeah.
just be like, "Hey, I've got this issue." But I will say this too. This
Mhm.
weekend, I was going through my mail and I found I had this check from Guild Mortgage. Like, what in the world? And then I opened up the next piece of mail. I'm really bad at opening mail. Like it'll
Oh.
sit it'll sit for like 6 weeks before I open it. And so I open it up and here's this check. And I'm like, it's not just for like 50 bucks, it's for a lot of money. And I'm like,
Mhm.
what in the world? And so then I started opening the other things, and I had seen online that I had gotten a statement saying that they had reevaluated my loans and the escrows and all this stuff. And this was when I looked at it, one of my loans went up, one of my loans went down. I was like, did I make a payment to the wrong place? Did something go on? What happened? So it was the weekend. I wasn't going to bother you. So I just hit the 800 number and I had
Mhm.
somebody answer the phone within 30 seconds. He
Oh,
asked me,
good.
hey, what's your name? What's your social? Just the
Mhm.
basic qualifying information. Popped it up. We had a conversation for 5 minutes, got all the answers for it. I was like, hey, this was simple and easy. It
Yeah.
wasn't 3 hours on the phone, but it's so nice to have the ability to just pick up the phone, call the local lender. It's
Mhm.
kind of like my insurance person. And by the way, guys, Terry
Oh,
Branson's coming on
great.
next week.
Mhm.
I have her scheduled. We're going to talk about flood insurance and all that fun stuff.
Good.
Make sure you come back. It's going
Mhm.
to be exciting talking floods and all that good stuff. But if I have a problem with my insurance, I can walk in the door to her office and talk to her about it. I can call her phone directly. She answers the phone. I just say, "Hey, hey Terry, it's Jeremy," and she knows.
Yeah.
You know that kind of service. You gotta love it.
She's wonderful. I will say from the lending side too, if anything comes up, last minute or just, for recommending her, she takes wonderful care of her clients, very customer service oriented.
Yeah, for sure. She's fantastic to work with.
Yes, she
So
is.
let's see. We got a question coming in here. Let's see what it says here. Tim said, with the new NAR guidelines, does your mortgage company give any leniency towards the max appraisal to maybe include slash cover the buyer agency fees? Ooh,
That's a
good.
good question.
Tim always has good questions for
I
me.
know that is really good.
He brings me the ones every week that make me think. So
We have, talked about that with VA financing, that's a possibility. With traditional loans, conventional and other government loans, there's nothing set at this point. So we just don't know yet, to be determined. And I think, you know, the new commissions that, a client can pay now for their buyer's commission, I have not. I've only seen that come across one time so far. So, yes, I think it's a big hot topic, but I don't know in our area. I don't think that it's that urgent that we're seeing it with each and every transaction.
Well, and the other thing I would say is this, Erica, and I had a conversation today with some clients that I'm going out to show property to tomorrow.
Hmm.
And they were very concerned about this whole thing, and with it all just literally taking place in the last 10 days.
Hmm.
Literally, we're 10 days into this, figuring this all out, and not only are the realtors trying to figure it out, but the lenders are trying to figure it out.
Yeah.
Everybody's trying to figure it out, and nobody wants to end up getting in trouble, so we're all
Hmm.
walking very cautiously with it all. But what I shared today with my clients is that here in South Carolina, we are one of 18 states that had buyer agency agreements in place before any of this
Hmm.
took place.
Yeah.
We were not like the other states in the country where, in some of those states where now people are having to get this in place. They're freaking out. Oh my gosh, what am I supposed to do? I can't believe this is the world's ending. I'm going to have to go sell, feet pics, or I'm going to need to go do whatever just to survive. And they're going crazy, jumping off bridges type thing, right? And we're just like, calm down, let it
Yeah.
go. And I look at this whole transition with these laws and changes and everything going kind of similar to when TRID came around.
Yes. Yes.
When TRID came, we all went, oh my gosh, the world's
Hmm.
ending. The lenders and the attorneys are now the ones making the decisions and doing all of this, and it's no longer in our control. What are we going to do? The world's going to end because now I have to wait on a lender,
Hmm.
right? And you're going, oh my gosh, now we have to do all this extra work and we have to handle all these things that we didn't before, and the world's going to end because of it. But guess what? We went, maybe 2 weeks where we all just kind of had panic,
Hmm.
freaked out about it. We figured out the new normal, and life continued on. People
Right.
continued to buy and people continued to sell, right?
Hmm. Exactly. It's, change is always kind of scary, but we can't go without change. We're not growing if we're not changing. So, as you said, we'll just have to let this unfold and, look at the solutions as they come.
So very true. So very
Mhm.
true. So, what other questions? I know we got about 25 people or so that are in our
Mhm.
chat tonight. If you guys have questions, post them.
Yeah.
Erica, I didn't tell you this, but I'm gonna throw you on the spot with some random questions, not real estate related. But we're
Okay.
gonna we're gonna hit you with some rapid fire. I did this with my wife the other week, and so we may do a little rapid fire through. But one of the first questions I want to know is,
Uh-huh.
where is one of your new favorite hot spots to go for dinner?
Ooh. There's so many, and I'm terrible with names, but I'm a wine drinker. I love my wine, and I love just not necessarily even a sit down dinner, but shared plates, appetizers, that sort of thing. So the tasting room is brand new, um, and it's locally owned. It's right across from where the old pavilion was, and they're
Okay.
really working hard on redeveloping that area. So definitely want to give them as much support as possible. And I should know the other name, but it's in North Myrtle Beach, and it just opened. Similar. Of course, I'll remember it, and I'll have to put it in the chat. But they're
You'll
doing
remember it.
well. Hmm.
So I will tell you one that my wife and I discovered in the last week and a half.
Hmm.
It's here in the Carolina Forest area, but it's called Flaming Fin. It
Oh,
is right by the Public Shopping Center in the River Oaks Pizzeria.
yep.
It is. They have fresh sushi, and all types of other Asian dishes. And I have to say, their lunch specials are
Uh-huh.
phenomenal. They're
Okay.
so incredibly affordable. They have like a bento box that I think is maybe $10 to $12,
That
and I mean,
sounds great.
you're getting a ton of food. Or you can get sushi rolls for like
Mhm.
$5 to $7 on some of them.
So you
And
have
it's
teenagers too, and
uh-huh.
mine love sushi. I'm like, oh my gosh, this was so expensive because they can eat like 5 rolls. I'm definitely gonna have to check this out.
Yes. Well, speaking of being able to eat, so my son, who's now the eighth grader,
Yep.
he is now 6'1", maybe 6'2". He's wearing a size 12 to 13 shoe. He
Hmm.
will eat his entire meal, have seconds, And then when we give him dessert, can I have another piece? No, son, stop. Stop. No.
Hmm.
I swear he has two hollow legs. It just kind of goes everywhere. But
Right.
Flaming Fin in Myrtle, it's
Mhm.
right here in Carolina Forest area. If you guys have not tried that yet, definitely give that one a try. It is definitely one of our new favorite hot spots to go to. And because it's so new and it's not in the touristy part of Myrtle Beach,
Right.
you can walk in the door and get a table right away.
Mm.
So
Well,
it's
that is on my list this week. And I'll mention your name.
come on over and have lunch over this way.
Yes.
You just have to come over that as I call it, the invisible tourist barrier, otherwise known as the waterway, to keep him away. So
Yep.
yeah. So good. So all right, there's a new hotspot for you all to go check out. What else has been going on in the mortgage industry lately, Erica? Anything exciting, crazy, anything we should know about?
Well, I think, again, doing this 21 years, I feel like for a long time it's kind of been the traditional programs, if you will, and qualifying. Well, now with interest rates going up, um, the benefit of that is that we have more options and more non-traditional programs, if you will. So I'm doing loans that I've never done before, and I've learned so much. It's been wonderful. One of the things is a reverse mortgage, and it's gotten such a bad name. It's taboo. It's almost like um, people think about an FHA loan that it's bad and it's wrong. Well, it's not. It's an awesome way, to be able to keep your cash flow, to be able to enjoy retirement. And you can do them on purchases and refinances. And basically, the long and short of a reverse mortgage is you are in control. It's an optional payment. So if your mortgage payment is $1,000 a month, you can continue to pay it. If you don't, no big deal. It goes on to the amount owed. And when you sell that house or, unfortunately you pass away, that's still your equity. For your heirs, they would still get whatever, the difference is from what it sells and what your mortgage balance is. And if you're in that situation, let's say you're the heir, you still have a full year to decide what to do with it. You can refinance it into your name or you can sell it. So again, it's just a neat way, I think, to help people as things in general just get more and more expensive.
So reverse mortgages are becoming popular.
They are.
Yeah.
I mean, again, it was something I didn't know about as much as I should in the past, and we've just
Mhm.
acquired a very large reverse mortgage company and
Mm.
gotten, just a wealth of knowledge about it. And it really is beneficial for, everybody's different. It depends on your situation, but a lot of people have been taking advantage of that.
Sure, sure. I don't know if they're on tonight watching or not, but I have a call tomorrow
Hmm.
with someone who wants to move to the area. They're first time home buyers.
Uh-huh.
But they to move here, they won't have employment.
Hmm.
What do they need in order to, number one, for a debt? Let's talk about it for when I talk to these people. I know the answers, but just so everyone else who's watching might want to know as well, what kind of down payment do we need? What
Hmm.
kind of employment do we need? How do we move to the beach and get a house when we don't have a job?
Yes, that's definitely a frequent question. So there's a couple different scenarios. If somebody calls in, they're in that situation that, they're ready to move. Well, a couple different things. If you can work remotely, you're good to go. We would just need a letter from your employer stating that you can work remotely, that a move basically would not affect your pay. If there's a transfer, we would need to see that offer letter. And if you're hourly, we would need to see at least one pay stub showing your full time. Um, So those are kind of like the basics. If your salary, it does help because that's guaranteed income, and it just shortens everything as far as the turn time. If your salary and you've got a start date, we can close that day. We don't need to see a pay stub. But again, if you're hourly, you don't truly, you're not guaranteed per se the 40 hours. So in that situation, again, we would need the letter of employment and 30 days worth of pay, and then we can close.
Interesting. Sorry, I
Mhm.
got somebody who's spamming the chat, so I have to block them for a minute. There
And
we
I
go.
do have one more thing to say with that.
Sure.
Oftentimes we see it's a transition period. So for instance, the wife might be able to work remotely, but the husband, you know, he can't. So as long as we can show the wife's income and she's the primary residence and it makes sense, we're still using the husband's income, but let's say he's going to live with a family member or he's able to go back and forth and stay with a friend, we can we can make that work as well. Again, it all just has to make sense.
Sure. Sure.
Mhm.
Yeah, and I've seen some of that recently with, the wife has a good paying job
Mhm.
in Las Vegas, but the husband's a remote, so he can work anywhere and be
Yeah.
anywhere. But she has kind of the breadwinner job in
Mhm.
Vegas, but they want to buy a home and move here. So
Yeah.
hers is going to go away, and they're like, "Well, how do we qualify with it?" And I was like, it's tough. You really can't. Either she needs to stay and live in Vegas for another year or two.
Mhm.
You get the loan, and you know,
Yeah.
once you're closed, if she quits her job 6 weeks after you're closed, the lender's not going to show up at your door and go, "Hey, show me your pay stub that you're still working there,"
It's
type
all
of thing.
based on intent.
Right.
Mhm.
Yep. Type of thing. You know, with it, their issue that they ran into then is that they also had the wonderful thing called student loans for their child.
Oh yeah, yeah. Mhm.
And so when they had those on, they could not qualify. So they're in the process right now of the son is going to the military. And so
Oh,
once you go into the military, you can get
mhm.
those deferred, they said.
Correct. Mhm.
So we're working through all of that fun stuff to try to get them taken care of on a new construction home.
Yep.
So
It just shows everybody is so unique, each and every person. So don't like it just depends on what your situation is, what your goals are, what's your plan. You can't go online and try to get a loan this way or find a house this way and do it all virtual. It's near impossible. You definitely need an advisor and somebody to walk you through the process.
for sure.
That's
And you
my
want
2 cents.
And you want an expert. You want somebody who's been doing this
Mhm.
for, this isn't their first week and you're their first client. Now,
Correct.
granted, listen, we all had to start sometime. I get
Yeah.
it.
Oh,
But
100%.
I wanna know that I got somebody to help me in my corner doing it. So
Yeah.
anyway, we got a couple questions coming in. I'm glad to see
Okay.
people are waking up finally. Let's see here. We are working with the lender, and the contract states 7% interest rate. Is that locked in, or is there still wiggle room prior to closing? I'll answer this one for you because I know this one specific. That is a question to contact the builder lender immediately and ask them about it.
Mhm.
If you have not locked yet, hold off. They will tell you when is the right time to do it.
Mhm.
Um, you know, and Erica, you can talk to this a minute. Interest rates kind of do this all the time, where they go up, down, up, down, up, down, up, down, and then you may see where, hey, next week they're going to have a good jump. We feel so. If
Mhm.
you're wanting to buy, lock now because it's going to be the best it's going to be till you close. Or
Right.
there's a chance next week they're going to drop some. Which one? Let's wait till then to do it. Would you agree with that?
Yes. And definitely check with your loan officer. They need to tell you if you're locked or not. So you should have had a conversation or received, again, confirmation you would have had a sign that you're locked in. So definitely check into that. But if you have, I say anything past a 30-day closing, I'm advising clients now just to wait, because hopefully, again, we've started to see that downward trend. I'm watching it each and every day. So when I feel it's the right time to lock, of course, I'm going to advise you, especially with new construction too. Like, we have extended rate locks. We can lock up to a year, but right now, time is on your side. So there's no sense in paying, an additional deposit to do something like that.
And let me ask this question while we're on that subject for a minute. It just popped in my head.
Sure.
If I close on a property today with you, Erica, and say
Mhm.
my rate was 7%,
Right.
and in 2 months' time, it drops down to 6%.
Hmm.
You told me that would be a saving of, what was it, $200 a
Yeah.
month, right? If I
Hmm.
want to, I can come back and refinance that. You guys offer programs to help with a refinance like that as well, correct?
That is right. Yep. If we want clients for life, and that's what we're here, that's our goal. So I monitor again each and every day interest rates. Once it makes financial sense to do the refi, I will call you, and we do not charge anything on our side for the refinance. So you just have some very small fees. The attorney would just need to update title work. We may or may not need an appraisal, but again, very minor.
Yeah, good deal. Cool.
Hmm.
All right, here's another question coming. Tim's giving you another one for you to. Is there an EPO fee for paying off reverse mortgages before death?
No, that's a great question, Tim. I like that. No, there is not.
Tim's got some good
I
questions.
know, Tim, you were smart. Were you a lender in your previous life or a lender now?
Either that or he was in somehow related into the real estate industry, I
Yes,
think.
I
So,
agree.
all right. Let's see. We have oh, hey, I know this person. What
Oh,
options
Catherine.
what options are there for parents who are looking into buying a small home or condo for their college student to use while they're at CCU? Does it have to be in under their name or as a second home? And then she goes on to also or are there options to put it in the student's name?
Catherine, that is a phenomenal question. I love how you brought that up. Yes, there are so many options, and this I think is just one of those surprises, if you will, a good surprise. So we actually can do a loan for your student or even an elderly parent as a primary residence. So you would get that reduced rate. You don't have to pay the investor rate because it is, again, for immediate family. And we would just need a letter of explanation. Hey, I'm, purchasing a condo for my daughter Catherine. She's going to CCU, and we follow the primary residence guidelines, and you get that rate.
Yeah,
So no 25% down and no point higher in interest rate. That's a win-win.
perfect. Awesome.
Mhm.
All right. Another question came in from Amy. Amy wants to know first, so she says, "Hello, guys. How much are the property taxes in Myrtle Beach?" Well, it's kind of a convoluted question
Mhm.
that you're asking there, but it depends a lot on the whether it's your primary residence, second home. That's the big thing. Obviously, that also depends on how your house value is. If your house value is 300,000 versus 800,000, it's going to be a big difference. But
Mhm.
I would say, Erica, what would you say if we had a primary residence around 350,000? What am I looking at for taxes on that per year? Would you say?
I have my average. So I take, if it's a primary residence, I take 0.4% of the purchase price, and that's a good estimate of your annual taxes. And then if it's a second home or investment property, it's a 1.4%.
Yeah, and there actually, excuse me, there actually is now a site that they finally have
Oh,
brought out in Horry County where we can actually now get an estimate. And here,
very
let me show y'all. It's kind of cool. So let me hide your questions so that we bop out of the way. And so you can see, you can come in here, you can put in the PIN number of a
Hmm.
property and what you think the estimated value. So for fun, let's just go over here and we're just going to grab a new home, and I have the MLS open. And let's go down here. I always like to buy the most expensive house. Don't you two? So Erica, this looks like a nice house on Melody Lane.
There we
Okay.
go.
And let me just go here, find where do we have our PIN number right there. So we copy this, go over here to the tax estimator, and we're going to type in this PIN number. And the price of it was 1 point. We're going to get it for 1 million. We're going to get a good deal on this. So 1, and it's going to be a legal residence, and calculate. And you can see right there, it calculates it out on that $1 million property. That would be $4,248 on it. So it's
That's
pretty
good.
cool.
It's not, yeah, it's not, I mean, accurate figures are the best, but just on the fly, mine in my head would have been $4,000 using that 0.4%.
Yep. So this is a cool little site that they have now that's available for people to help out. So, all right. Let's see. We have some more questions coming in here. Let's see. Oh, here he comes.
Go.
This is Mike. Mike's a Dallas Cowboys fan, so he bought a beautiful home over in Del Webb, and
Oh,
yeah, he always likes to give me a hard time. But he has a good question. He wants to know if the feds drop the rate, how long does it take loans to reflect the drop?
well, the Fed is not directly correlated to mortgage interest rates. Again, I mean, it does have some effect, don't get me wrong, but if the Fed drops the rate, it does not mean that mortgage interest rates are going to go down or up. It, mortgage rates are more tied to, again, overall economy and unemployment.
All right. We also have Jules saying, I'm new. Hello, welcome in.
Hi.
Amy says, thanks. Planning to someday retire to Myrtle. Well, when you're ready, I'll help you buy the house. She'll help you get the loan.
Yes.
And Mike came in just to say go. At least he didn't say go Cowboys today. If he did, I might have to kick him out or mute him from the room. But thanks everybody for some comments and questions. If you have more, we're here to answer those questions. One of the things I want to do is give you a second to rest your voice, Erica, and I'm going to take a minute to show you all.
Perfect.
We have, as I've shared this before the last few weeks, I have started a new channel that is out there. Oh, let me get rid of Mike out of the way here. He's always blocking stuff up. But I do have this channel that is out there showing videos that is starting to get more and more content on it for different areas of Myrtle Beach. As you can see, here's a video of Berkshire Forest. Here's one of the farm. And as you can see in the video, there's going to be a video just kind of show a good overall description of the neighborhood. So you can see kind of some aerial shots. You'll be able to see there's a description where I'm talking about what's going on in it, as well as there are some parts where we're just driving the streets. So people want to know what's it like living in Myrtle Beach, what's it like in these developments. So we've started to create content showing this off. In addition to the ones that are going to be kind of this overview video, there are also some full driving tours of the development. So, like here is the farm once again, where you can see I literally take the GoPro, strap it to the top of the car, just drive around the development and kind of narrate as we're going through what it's like driving through the streets. Because people want to know, what are the neighborhoods like? Do they have
Mhm.
how close are the houses together? You know, is there pond water views? You know, do all the houses back up to each other? All that kind of stuff. So this channel is out there, and it's Home Tours of Myrtle Beach. I will put a link in the chat for everybody. Don't go check it out right now because you'll leave our stream. We don't want you to leave us. So we want you to ask us your questions. But you can go check this out later. Make sure you subscribe to it because there's going to be more of them coming in the very, very near future. I actually met with my video gentleman today. He's working on it. Also, Erica, I know you are a fanatic with short form content and reels and all that stuff. I have not gotten into the world of Instagram just yet, but I do have this channel which shows all kinds of short form content about things going on in the area.
Very
So if
cool.
you want to go see what it's like at the Greg Rolls Legacy Theater in North Myrtle
Mhm.
Beach, here's a video that shows, a quick. We were invited up there for a pre-show opening, and my wife and I went up. You can see what it's like inside. You'll see some shots that are going to show what it's like inside the theater. Which, by the way, if you have not gone, it has some of the most comfiest seats you will ever find in a theater. They're super, super comfy, and so you can see some live music and stuff that's going on, all kinds of stuff like that. We also have on the channel in here some videos, and they're in playlists. You can go in and check them out. If you want to know about, food things or insider tips, here's foodie spots. You want to know best pizza? Bam, here's one. Talks about it. Here's another one about best pizza, best local lunch spots. And this is my video guy. He jumps on and does a couple of them too. He's a native to Myrtle Beach. I know it's one of those weird, rare things to find, but he is a true native. Erica, you're native to Myrtle Beach too, aren't you?
I am, yes. And I love that you said that because I noticed he was recommending Magnolias, which has been here forever and ever.
Yep.
A good friend of mine, we graduated high school together. Her family owns Magnolias. So I second that.
Very
Hmm.
cool. One of
Yeah.
his other spots that he mentioned was Oliver's out in Conway.
Hmm.
And he just has all of these different spots, but there's all kinds of short form content
Very
that's
cool.
available on this channel as well. So go over and check that one out too later. I'll put a link to that one as well. And I see. I think we have some more comments coming in here. So let's check those out too to see what people are asking. So my wife wants to. Do you plan on doing any development drive-throughs on the North Myrtle Little? Yes, dear. We're gonna go up to the northern end as well. I just have to have the time to do it. Um, all right. Linda wants to know, what is an acceptable credit score to apply for a VA loan? My daughter and son-in-law are looking to move to Myrtle Beach once he's out of the Navy. They will be first-time home buyers. Ooh, that's a good question, Erica.
That is. That's so exciting. VA, it's a ton of flexibility, especially with credit. You can have as low as a 560. And there's a lot of flexibility as well with the debt to income ratio. And even if they're not at a 560, it just means it's not going to happen right now, but it'll happen. We can put them on a great credit plan.
Yeah, and one of the things that you should mention too, Erica, is that if somebody does have credit problems,
Hmm.
you have excellent, phenomenal resources
Thank
to
you.
help them get things fixed,
Yeah.
get them on the right track so that you can get to that reality of home ownership.
Hmm.
There are some excellent things that are out there. And as someone, I've shared in the past with the channel, and when I meet people in person, I share it a lot. My wife and I, we went through a time where we lost everything, and our credit scores were horrible, terrible. I went to get a car loan, and it took them 9 different loan companies to give me a car loan. And car loans are pretty easy to get in comparison to a mortgage. But it took them 9 different ones, and they finally quoted me a rate at
Oh
27.99%
my
for
goodness.
a vehicle.
Mm.
Luckily, yeah, we didn't have to do that.
Good.
But talk with Erica if you have credit score problems. She can help you get that stuff fixed
Yeah.
as well.
Sometimes it's just a little bit goes a long way.
Ooh, Erica is the native.
Oh my gosh, definitely. If you go down, there's so many different great places you can, drive by and see lights. But the best one is in, oh my gosh, it's in Polly's Island. I'm losing my train of thought here. What's the big, like it's
Night,
got sculptures
Night of
and
a Thousand Candles?
yes, thank you. Night of a Thousand Candles. And you definitely have to check it out. The tickets go, they sell out very quickly. I think They go on sale like about October. Is that, do you know, Jeremy?
I'm not sure, but I think you're probably right on that.
Hmm.
Yeah, and so that's down at Brook Green Gardens, where
Brooklyn
you can
Garden.
go and walk around in all of the gardens. They light them up at night with millions
Hmm.
and millions of candles. They say a light of 1,000 candles, but it's millions,
Yes,
so
more, yeah.
you get set
Hmm.
time. It's really really cool. Now, if you were going to go to an entertainment show, and I think that's where Mike was wanting to go with this question,
Oh, gotcha.
which of the Christmas shows do you want to go check out? We're going to the Opry. We're going to Alabama. We're going to the Pirates. Let's see what else we have then. The Knights in the Castle or Greg
Hmm.
Rolls. You basically have those as your main options. Which one are
Well,
we going to?
I've never been to Greg Rolls, but the Opry, that was a family tradition that we had each and every year. My grandmother took the whole family there until she passed away. So it definitely, it speaks to my heart, and it was it was great. They did a wonderful job.
I think, Mike, what the real answer needs to be here is all of them.
Yeah.
You need to go check out all of them now that you
Hmm.
live here, and then you can come back and join me on the show and tell everyone which one's
There
the
we
best.
go. Perfect.
There we go. But I'm not letting you talk about Cowboys. So if there's any chance of that coming, yep, we're just going to mute you. So, all right, let's see what else we have here. Hi, Jeremy, the wife, and I are looking forward to meeting with you again in late September. We're bringing the daughter and son-in-law. They're interested in following us to Myrtle Beach.
That's so
Awesome.
cool.
We'll definitely meet up, Mike. I'm looking forward to it. It's good chatting with you the other day for sure. My wife wants to know, can we hear from Erica? What are her favorite things to do during local summer or the early fall? Local summer, she told me, is this new term for basically September here in Myrtle Beach, because it's when all the locals get to actually, because we still have summer weather,
Yes.
but all the tourists are gone. So, what are your
Hmm.
favorite things to do for local summer?
That is when I like to enjoy all the, I say touristy, but more historic things that we've had forever and ever. You know, if you want to go to Myrtle Waves, if the beach never gets old, my goodness, I could go there every chance I can get. But you just don't have to run into those crowds. You actually can get a parking space, all that. Yeah, to anything like the go karts, those are always fun to do, especially with the kids. There's so much to do. I love just walking around Market Common too. And it's not that it gets too busy in the summer, but having a little bit cooler weather helps to to be able to stay there a little bit longer.
Okay, question for you.
Hmm.
We're going out for date. You're going out for date night, not we. You're going out for date night. This would be a little awkward if we're going
Yeah,
out for date night
right.
with honey. You get where I'm going here.
Hmm.
My wife's going out for date night with me. Where
Yes.
did she go to get her outfit for the date night?
Oh, best question. There's a wonderful local boutique called Melrose. Highly recommend that. And there's Monkeys, which is also local, but it's more like a franchise. You might have heard of Monkeys before, and they have that at Barefoot Landing. Both of them have great women's clothing. Sorry, they do not have men's. I'm not well versed there. I'm
I
not
got my
sure.
red, white, and blue shirt. I'm good to go.
Yeah.
I'm in the red, white, and blue. I'm ready to go. I've got my
Hmm.
Remax colors representing. I'm
Right.
golden. I'm golden. Okay, so we're going to Monkeys and Melrose. Okay,
No. Hmm.
all right, cool. And when you're going out on date night, where are you going?
That is number one, hands down. It's Bistro 90. I don't know if you've
Okay,
eaten there, but my goodness, it is the best steak I've ever had. The owner and the staff, they're just so incredible. So it really helps just the overall experience. But if you go there, steak for sure. If you are a bourbon or wine drinker, the list and the menu is so extensive. It's just, it's wild. It's a great time. So good food and good booze.
Bistro 90, and that's off of Highway 90
It
in
is.
Conway,
Mm-hmm.
which out near there is a new development that D.R. Horton is building. And when they started, I'm like, why are you building way out here? They're like, Jeremy, this is the next section that's going to grow up.
Yep.
And they're going to put, I think, like 13 to 1,400 homes out
Gosh,
there. It's going to
wow.
be a huge development until it's said and
Hmm.
done. Yeah. So, all right, cool. Matt says, "Hey, Jeremy from Indiana, welcome in, Matt. Glad you're here." Mike says, "Deal. Go ahead. Tell me which one's the best, Mike. We need to know." And then, what is Erica's contact information?
Thank
Great
you.
question,
Mhm.
GTO. And just because you asked that, I'm gonna go right here. Bam. Here's
Yeah.
Erica's information. I had it pulled up so that we could see it. Let me get this out of the way over here. So there you go. You can see, and oh, we're gonna hide that. That way we drop down, and so you can see right here's her information on her site. If you just Google her, Guild Mortgage Erica Davis, it'll pop up. But
Yeah.
her office number is 843-839-9001, and you can email her edavis@guildmortgage.net. And Erica, if you want to put that in the comment section, you can, or if you want me to, I can type it in there for them then in a bit as well. But
Perfect.
that way, you guys can get a hold of her. Erica, tell them what's the easiest way to get a hold of you while I type this out for them.
The easiest is my cell phone, and I'll put it in the contacts, but you can call or text me. Of course, email as well, but I'm very accessible. And if you're on Instagram, definitely follow me. It's the Stylish Lender.
Guildmortgage.net.
Let's see.
And what's your cell phone number, Erica?
It is 843-902-6146.
Beautiful. There we go. So there's her information for you guys as well. All
Perfect.
right, let's see. We got some other questions coming in here. Let's see here. Tim wants to know, are you seeing loan amounts trending up or down? Seeing down payments trending up or down?
That's a great question. With rates being a little bit higher, people are putting less down. You'd think it would be the opposite, but I think it's just people are nervous and they're scared. It's the territory, that we haven't been in a while. So kind of feel like cash is king type thing. If you're looking at a second home or an investment property, you do need more of a down payment. Typically, it's 25%.
Okay. Here's another question for you. Erica, when getting a second home mortgage, can we buy down points?
Yeah. Yes, you can. And here's my professional opinion on that. So, yes, you can buy down points, but essentially, you're purchasing a lower payment. So, again, let's say you get a quarter point better on your interest rate, but you have to pay 1% of that loan amount. You can accomplish the same thing, if not more, by just applying a little bit more towards principal. For instance, like if you round up on your mortgage or you just pay one additional mortgage payment a year, it takes off about 7 to 8 years off the life of the loan. So yes, you can buy points, but I would hang on to your cash and just put that cash right towards the mortgage.
Yeah, and you were getting to the point. One of the questions was going to ask, if I have a mortgage now,
Mm-hmm.
what is the best way to pay off that mortgage? How should I go about that? Am I doubling a payment? Am I just paying a little bit extra each month? What's the best way to go about it?
Yeah, either one, it achieves the same goals. So the more you can pay, and with us, you don't have to specify towards principal, but all, mortgage companies are different. So you know, just to be safe, apply towards principal. But again, just one additional payment takes 8 years off the life of the loan. Me personally, I just keep it simple and I round up every single month and I have it on auto draft and it's made a very quick difference.
Yeah, and one of my favorite sites that's out there is
Hmm.
this one from Dave Ramsey, which he
Yeah.
has a mortgage payoff calculator where
Hmm.
you can come in and you can put in your original
Yeah.
loan amount. You can put in that the loan length, the percentage, and then it continue. You hit continue, and it calculates it out, and it says this is what it is if you do it regularly. If you do this, you can do this with it instead. Then
Hmm.
it's a really cool tool to kind of figure out what you want. So if we said, hey, we have a $300,000 loan, right? I have enough zeros on 1, 2, 3. Yep, I do.
Hmm.
And we'll say the first payment date is, well, we're here 8/27/25. 2024, and it's a 30-year loan, and we're saying rates today are 6.5%, right?
Yeah.
So it's saying basically our current monthly principal and interest should be around there. And so it goes through and it calculates it. And then it goes in here and you can say, well, I want to make an extra payment each month of, so what was it, 1826, I think it said. So we want to, just if we put the extra
Yeah.
$75, right? It'll show you we make an extra $75 each month, how it changes it, and it took 3 years off just doing that.
Yeah.
It's really fun that you can come in here then and say, okay, well, I want to put an extra $200 a month towards my payment.
Mhm.
And then you can see, wow, great. Or I want to do just a one-time payment, because that's the other question I get a lot of times. Well, what if I get a big chunk of money? Which, Erica, we got to talk about that in a minute.
Yes.
But we have that $300,000 mortgage, and I get an inheritance of $10,000. We'll say $100,000. What does that do? Bam, we can really drop it down. But
Wow.
Erica, one of the cool things that you all offer a lot of times is that famous word that I like to share with my friends called recast.
Yes.
Talk about recasting.
So Recast, it's just an amazing tool that you guys can use. If you want to apply anything more than $10,000 a year towards your mortgage, you simply call me up. It goes right towards principal, and we re-amortize the loan so you have the lower monthly payment. So it's essentially a free refinance, and again, it's going right towards principal. This is wonderful for those in transition. So let's say, you live in New York right now and you own your home free and clear. Well, you want to move to Myrtle Beach first, get settled, get everything cleaned out of your home in New York, and then you'll put it on the market. So once it sells, you have $400,000. You can apply as much or as little as that $400,000 if you would like to, right towards the loan. Or, again, you might have a mortgage on it, but as long as we can qualify you with both homes, put as little as amount down as you can, in South Carolina, knowing that that payment is going to go down as soon as your other home sells and we do that recast.
Yeah.
So tons of flexibility.
And is it just I can only do it one time, or can I do it more than once?
You can do it once a year.
Okay. And when I'm doing it, I don't know if you said this or not, but is there a minimum amount that I need to do on it?
Yes. It's anything over $10,000. And again, once a year, we will do that. So, and two, if you just want to save, your goal is to pay off the loan very quickly, open up a new account, start saving money into that until you get over the 10,000. And then every December, come see me. We'll do a recast.
Perfect. Awesome. Awesome. All right. Let's see. We got some more questions coming in here for you. Erica, what is the most frequently asked mortgage question for first-time home buyers? Or what question do you think they should be asking?
Yes. So a lot of first-time home buyers, they're just nervous. They want to get pre-qualified. That's all they know is I need to get pre-approved. And my first two questions are always about budget. I've said, that's great. I'm here to help. We'll just back into things. What's your goal for your monthly payment? What can you comfortably afford? And as soon as I say that, they're like, oh my gosh, I haven't thought about that. Then we talk about, okay, what are you paying in rent right now? And go over things like that. And then what's their budget for out-of-pocket expenses, such as a down payment and closing cost. So those are, my number one. We got to talk about those up front.
Well, and I think along with that too, the other thing for someone who's a first-time home buyer, one of the things that you must take into consideration is not only having the down payment, but having that oh no fund as well.
Yes.
Because there's going to be things that happen. Some of our good friends just bought a home here. It was a resale. And, 3 days after they moved in, the fan on the air conditioner went out.
Oh,
and so they had to spend $500 to get that fixed. And I've heard stories of, we just closed and, 6 weeks after closing, the water heater died,
Yeah.
and this happened, and that happens. And so you need to have money saved aside. Yes, you can buy a home warranty, and that will help cover some of those expenses. But even with a home warranty, you have to have the service call fee,
Sure.
and sometimes it does not include all of the things on certain
Hmm.
things. If it's a whole new air conditioner, it may not cover all of the different fees, especially if
Hmm.
it's where it's an older home that had an older system and they have to change all the refrigeration lines and all that kind of good stuff. It could get a little bit of money. So I would say, in addition to knowing your budget, know also what do you have set aside for those oh no situations that come up, because it's not a matter of when, or a
Absolutely.
matter of if, it's a matter of when.
And that's what another thing talking about that budget is having these, like you said, the conversations up front. People think they naturally think, oh, I got to have 20% down, or if I put down five more $1,000, it's going to make a big interest, monthly payment difference. You're talking maybe $20, $30. And I always tell them, $20, $30 is not worth it. Hold on to that. Exactly. If something happens,
For
unforeseen
sure.
at the house.
Take that money, go open up a high yield savings account
Yeah.
that's earning 4 to 5%
Hmm.
a year, and stick that money in there and let it grow so that you have it. And hey, if you get enough in that rainy day fund, you then have enough to do the recast at the end of the year and save your money that way too.
Excellent
So
advice.
I would definitely consider doing that. Quick rapid fire for you. Here we go. Mortgage edition. How much money do I need for an FHA loan for a down payment?
Well, a regular FHA loan, you need 3.5%. But we also have an FHA zero edge where you have down payment assistance.
Okay.
Hmm.
I'm self-employed. How much do I need for a down payment?
Same as anybody else. It can be as little as 3% or 0%. We just traditionally, we've got to qualify you looking at 2 years of your tax returns. If you've been self employed for more than 5 years, we can just look at one. That's all for traditional mortgages. If you know that you don't claim all what you make, we also have what's called a bank statement loan and some other non traditional options. And typically, those are 10% down or higher, and it's based on credit.
I want to buy a second home. How
Hmm.
much?
Well, you can put less than 25% down. You can, but 25% down, again, that's kind of your sweet spot when it comes to interest rates. If you put down 20%, you have to pay discount points of, they're typically 2 or 3 discount points. I'd rather see you put that towards, your equity, towards purchasing the home.
When I'm buying a house, why do some people say you got to have 20% down?
Yes, that's a big
That's
misconception.
the Dave Ramsey.
Yeah.
Let's put it out there. Dave Ramsey tells me I can't buy a house without 20% down. Why?
Hmm. Well, it's to avoid private mortgage insurance, but private mortgage insurance is based on credit score. If you've got excellent credit, that is not a big expense. And again, you have more money in the bank. Everybody is different and unique when it comes to your financial stability. If you don't have that much in your savings, do not deplete it all to put more money down, like we just talked about.
Yeah. And, talking about that mortgage insurance,
Hmm.
it is something that falls off number one in a lot of the programs.
Hmm.
But also at the same time, if I'm getting let's say a $300,000 mortgage,
Hmm.
how much am I really spending each month on that mortgage insurance?
Yeah, it just depends again on credit score and your down payment totally. But if you have a 780 credit score and you're putting down, 5%, I mean, it's not going to be that much, maybe $75.
Yeah, it's not this huge amount. So I get where Dave's coming from with his statement of, make sure you're financially secure and stable in what you're buying and
Mhm.
having that equity in. I get it. But at the same time, do you really want to spend another 2 years renting, which
Mhm.
gives you zero wealth,
Yeah.
to save up to that 20% instead of just putting 5% down or 3% down and
Yeah.
getting the home now?
And rent's getting so expensive.
Yep, it is. It is.
Mhm.
So let's see. GTO says, thank you. Pat says, Ohio here. Thanks for doing these very informative streams. You're welcome, Pat. Matt said, thank you. Here's a question for you from Mike. Does Guild Mortgage sell the loans?
We do sell some and then we service some. So it depends on the program that, we pick for you or we select for you.
I can tell you the ones that I have, I absolutely love it.
Thanks. We love you.
It's so easy to have it all. Just I
In
have a
one
problem.
spot.
Somebody to call or email or
Mhm.
text.
There you go.
Being able to text your lender.
Yeah.
That's the best thing when I can just say help and the
Yeah.
phone rings. What do you need, Jeremy? So, all right. So, Erica, now
Hmm.
it's time to get your crystal ball out.
Okay.
What's going to tell everybody what you think is going to happen between now and the end of 2025? Where do you see
Oh.
things going with the interest rates, with mortgages, and with the real estate? Now, before you say this, though, I want to just make note to the audience.
Mhm.
I have not asked her this before, nor have I shared with her where I think things are going, nor has
Mhm.
she watched any of my videos where I talk about it. So let's see how close we are to each other.
Okay. Well, it's almost near impossible to make that forecast given the past 2 years of, oh, rates are going to start trending down and then they don't. But I do think, we've seen them trend down. Now we're coming up on election. I don't see them dropping too much until this election is over. We'll probably have some stabilization. And then, next year, I hope they continue to go down. I really don't see them going down tremendously. I don't. I mean, 6.5, if we could get it down to 5.5, that would be a huge win. But getting in the high fives again, I think it's very healthy for the economy and for the housing market. Um, as far as like the housing market, in our area, we're so lucky because it continues to appreciate year over year. We have not seen a loss. In fact, and I know we're in the top 3 for top areas to relocate.
Mm-hmm.
So I
I
know.
shared 2 or 3 weeks back a video that Pods, the moving company, ranked
Mhm.
as we were the number one incoming destination 2 years in a row.
Right.
First time
So
ever happened for them.
with inflation and the cost of, other areas, California, out west, just in general, I continue to see our market grow and appreciate. So, because you just can't, unfortunately, not a lot of people can continue to live out on the West Coast. It's gotten way too expensive.
It's amazing in the last 6 months how many people from the West Coast I have helped to
Hmm.
move here.
Yeah.
Because I have a client that's moving here. They're closing on a home tomorrow from Hawaii. Okay.
Wow.
Their home in Hawaii will sell for, well, probably north of $2 million.
Hmm.
It is very small, has no yard. Their backyard is a cliff. Okay. So there
Mm.
is no yard. $2 million, maybe a 1,500 square foot house. They're buying a home here that's close to 3,000 square feet
Mm.
in gated section of Berkshire Forest.
Wow.
Beautiful open floor plan home, amazing amenities, everything you can think of
Hmm.
for a quarter of what their house there will sell
Yeah.
for. And it's almost new. Their home out there is also, I think, built in like the 70s or 80s. So I see this happening over and over and over.
Too.
Um, you know, the big thing that I would say to look at when it comes to figuring out what is going to happen in the future. As we talked about, we're going to see, the rates do their thing real soon. And when that happens, what we're going to see, if we go and we look here at Myrtle Beach's current market, you can see right
Mhm.
now we flattened. The inventory has stopped going up.
Yeah.
We've stayed now since May at 4.7 months. That means what's coming on the market, what's sold is equaling out each month with the market. We're
Mm,
never going to get back to, I think, where we see it down here at the 1.1 like we saw in February,
right.
but this is going to go down. And when we see this inventory start dropping down, on the other side, what you're going to see instead then is you're going to see this here start to take a sharp turn up. And I
Hmm.
shared this, Erica, and you've been in this business for a very long time too. But if you look, we're following the cycles of many, many other years. If you look between June and July, we dropped from 330 to 324. Well, if we
Hmm.
go back here to June, July of last year we were at 329 and we went to 326. So we had a drop there. If we go back here again and we find June to July, we went from
Hmm.
320 to 315. If we keep going back, and I mean, I could do this pullback, you're going to see it everywhere. Why is that? That's because in June to July, everybody's doing vacation.
Yeah.
Everybody's enjoying the summer. They're not thinking about it. September usually is a kind of slow month. Why? Everybody's going back to school. They're
Hmm.
focusing in on school at that time. Why is it then that we see when we get to December, it's slow again? It's the holidays. We have these cycles we go through every single year. So, people who are freaking out because, oh, the market's dying, it's crashing, we're going back into a housing bubble. I don't see that happening. I
Yeah.
don't see a bubble coming anytime soon.
Hmm.
Um, in fact, I see the opposite. I see that as we head into the end of 2024 and into 2025, the market going the opposite way. We're going to start to see more homes selling, more
Yeah.
buyers coming to market, and values going back up again. That's just me. So,
Yeah. I do too.
anyway, well, it's almost 7:30. Erica, we've been going for almost 90 minutes. That's impressive. All right. If you have any other questions, go ahead, get them in now because I'm gonna let Erica go. I promised her that we wouldn't go more than an hour, and here we are in 90 minutes.
I am
But
good. My kids, they might be, wanting their dinner, but I could do this all night long. This is so much fun.
there
Thank
you
you.
go. So here's another question coming in. Do you see many younger homeowners like Gen Z, or are the stereotypes of them living with the parents or just renting true?
Well, with the interest rates, especially when they got close to eight, I mean, they didn't have much buying power at all, especially in our area. I mean, Jeremy, it used to be you could get, a home for 200,000, but our average price is significantly increased. So it did hurt that. Now I do see a lot of, people trying to qualify again. And I have also seen I'm trying to think of percentages, but it's higher of people that are getting co-signers or co-borrowers in order to make this happen. That's quite common. That's an option. And I tell people, hey, listen, this is temporary. Get in, get the house. We can make a plan to cut down on some debt, save money from what they were paying in rent. And then, within a year, we can get the co-signer off if need be, but always have an action plan there.
I gotcha. Tim, I
Mhm.
see you say I skipped your question, but I don't see it in the chat. Can you post it again? I do see where you had posted this one. I thought we talked. Did we talk about this one, Erica?
Are you seeing loan money amounts trending up or down? Well, because of the average sales price going up, yes, we're seeing loan amounts trending up. And so, therefore, the payments are going up as well.
Okay, good. Let's see. Dora says thank you. Mike
Okay.
says thank you both. Um, Tim's a question about NAR guidelines. I don't see that one, Tim. So if you can type it again, that would be good. Here's a question from Linda. She wants to know which is better, a 15-year or a 30-year loan?
Well, I have had both. I will tell you that personally, I like the flexibility of a 30 because, nobody can tell the future. We don't have a crystal ball. So the 30-year just gives you more flexibility. And as we talked about, there's several ways to pay it off quicker, such as rounding up in your mortgage payment or even doing a recast. The 15-year obviously will get that done in 15 years or sooner. Interest rates typically are a little bit lower. But I only recommend that if you have a stable income. If your salary and your salary is going to continue going up, that's great. A 15-year, I think, would be advisable. But if you're commission based or self-employed and you have any doubt about having that stable income, I think it's too risky. Or, I would again recommend the 30.
Yeah, I'm kind of with you on that. And what I usually say to people is get the 30-year.
Mm-hmm.
Yeah, take it. Yes, it gives you the option that if you have that slow month, you don't have to stress as much. There's
Exactly.
nothing saying you can't pay it at the rate of a 15-year mortgage.
Mm-hmm.
If you have the funds to do it, make those additional payments each month on the principal, or
Sure.
at the end of the year, like we said, take that money, save it up, and do the recast if your lender offers it, and do that to buy it down. There are ways to do it as well to kind of speed up the payment, and you could do
Mm-hmm.
a 30-year in 15 fairly easy. And that way, at least when you do have those things come up, and they do, the car breaks down, the air conditioner's messed up, kid needs braces, you know,
Mm-hmm.
all that fun stuff that we
Yep.
deal with as parents. Maybe you don't have kids that you need to do that with, but the dog needs to go to the vet, whatever it may be. Those unexpenses, or in your case, crazy cat lady, the cat needs to go.
Yes.
Because how many cats do you have now?
I have three, and we have had a stray cat in our backyard now for several nights. My daughter is leaving food out. I told her, I'm like, no more. We're done. Three's enough.
Yeah,
Next show, though, I might have four.
it could be the outside cat.
Yeah.
There you go. You have an outside cat. Our neighbors have one that stays outside, and it freaks me out because it loves to come over to our driveway at night, and it lays under the car. And
Ah.
then you walk outside and don't expect it, and it comes out from underneath. Meow, and you're like,
Mhm.
okay, I was not expecting. Freaking
Yeah,
me out all the time. And
they
he
do
always
like
wants to come see me because he knows I'm allergic to cats. So he wants to be near me. And I'm like, please stay over there.
that. Yeah.
So
Can't have that.
speaking of pets, what veterinary hospital do you go to? That's a question I
Well,
get asked a lot.
the one on 21st, and I think it's Veterinarian Clinic of Myrtle Beach. Like, it's just a very
Okay.
black and white
So
name. But they're very
people ask me all the time, where do we go for a vet?
Mhm.
I take mine to River Oaks Animal Hospital over
Mhm.
here since I live on the west side of the waterway. They just opened up a brand new location that's gorgeous. So definitely check that one out.
Yeah.
Sorry, Tim, you said one about my wife, and I've scrolled back through. I don't see it anywhere. So, um, yeah, unfortunately, I'm going all the way up. Oh, maybe it was this one. Was it this one? Erica, can you answer that one again?
Sure. Yeah. Because it's new, there's no set guidelines in place yet. VA is contemplating some and they're talking about it, but nothing has been set at this time.
So, yeah, that's like I said, there's a lot of unknowns, even though the laws have been passed and put into place, all of these changes. There's still
Hmm.
a lot that we're trying to figure out.
Yeah.
And I've heard rumors that they're already planning to make some changes to the South Carolina um, contracts already on compensation and closing costs and all that kind of stuff. So new forms again. Yay.
Just when we got used to the old.
Yeah. Linda said, thank you. Okay, what's Matt say? Matt said, is there a limit on home people can buy, like for investment property?
That's a
Huh?
great question too, Matt. For conventional loans, it's typically 10, but there's also, again, like we were just talking about, the non-conventional products. They're called brokered products where you don't have those limitations.
Okay, so 10 properties.
Hmm.
All right, Matt, let's go buy 10.
Yeah, 10 mortgage properties.
Erica's ready to do the 10 loans.
Yes,
I'm ready to help
it'll
you
be
write
so
the 10
simple.
offers. You just got to have the 10 down payments.
Yep,
So give me
winning
a
the
call.
lottery.
We'll take care of it. One of the things too, and I should mention this, and I didn't. I'm a little slacker on that tonight. But let me go over here and open up a new tab for you all and share the screen.
Awesome.
I'm getting good at this whole. Oh, whoop, there we go. So, as I always say to people, if you have questions specific to
Mhm.
things and you want to chat, go over to jeremyblanton.com and you can just simply click on a day of the month. Maybe you don't want to talk in August, you want to go to September. This is connected directly into my calendar. And so you can come in, you can click right here, say, I want to schedule a call with Jeremy on this day at this time. You fill out your information and hit schedule an event, and it's going to come directly to me, and we will have a good conversation talking about your needs to purchase here in Myrtle Beach. I did one of those earlier today with someone,
Mhm.
and I have two tomorrow as well. So if you're thinking about making the move and you want to talk about specific things, feel free to reach out. I'm here to help you guys however I can. I've been doing this now for over 20 years. Erica, you've been in the lending industry for how many years now?
21.
Yeah, so you've been selling loans about as long as I've been selling houses.
Yes.
I started in 2001,
Yeah.
the week before 9/11. It was a great time to get into it.
Wow.
Tim
Wow.
says thanks to you both.
Thank
Matt
you.
says thank you. Matt says he's got 4 now. So Matt, we got room for 6.
6 more to go.
We're good to go. Yeah, there you go. So anyway, if nobody else has any questions anymore, Erica, I want to say thank you for joining in
Oh.
tonight. Is Yeah, I'm going to give you the floor to for the next couple minutes where you can share anything and everything you would like with the audience. The floor is yours, dear.
Well, thank you so much for having me, and Jeremy. It's always a pleasure. You do an amazing job for your clients. And I love how, too, you can book that appointment. So they've got your undivided attention for sure. I'm here for all your lending needs. It's just an honor to help my clients, and especially for people to relocate to my hometown. It's awesome. I'm here to help in any way. You can call me and text me, same, schedule a consultation, and we'll make the best plan for you, just depending on your individual needs.
Yeah, awesome. Well, thank you for joining in. I'm
Thank you for
sure
having me.
everybody enjoyed you being here. Guys, do me a favor. If you enjoyed having Erica tonight, can we do me a favor in the chat section? Can you all just say thanks, Erica? Thanks, Erica. Give her some thumbs up, some claps, all that kind of stuff. That way she can see it later when she goes back
No,
and watches the recast or the re-show of this later. She can catch it there. I want to thank everyone for joining in tonight. As always, guys, do me a favor with this video and with all of them. If you
hmm
enjoyed what we shared tonight, do me a favor, give it a thumbs up, get the bell on,
yeah,
and make sure that you subscribe so you know when we come live again. Like I said, next week we're going to be coming live with Terry Branson from We Insure, and we're going to be talking about insurance, floods, flood insurance, all that
hmm
fun stuff, hurricanes, the importance of having a newer roof on your house versus an older one, what to expect for rates, what are interest rates doing, and all that fun stuff related to insurance next week. It'll be a fun time.
that'd be
Also, be
great.
on the lookout later this week, hopefully Thursday or Friday. I've got another really good video that I'm about to post out about moving to the area and things you need to know and things to expect before you come here. And oh, I should also say this, if you didn't watch last week's yet, go check it out. It talks about the 5 biggest regrets people have of moving to Myrtle Beach. So there's a lot of good content out there. Here they're coming in, Eric. It's starting. Red,
Oh,
finger red number one, finger one, finger one, finger red number one. Thanks, Erica. More of it. Them hearts, claps. You getting them all?
yes, I did. Thank
Doug
you.
says she did my loan. Awesome person to work with. Guild
Thank you.
Mortgage is legit awesome.
Sweet.
That's a pretty good compliment right there.
Very nice. Thank you.
You're
Thank you.
legit awesome. So, anyway, guys, thank you so much for joining in tonight. If you need something, feel free to reach out. You can email me info@jeremyblanton.com, or like I said, go book that call. And
Yep.
as always, I will catch y'all in the next one. See you later.
Awesome.